a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Well, real estate stocks have been on the upswing, so it only stands to reason that we would be looking at real estate ETFs, REITs, right, with our ETF research director, Nina Mishra, who's here with me now. Real estate stocks are beating the market?
Yes, particularly off late, they have been outperforming the broader market very nicely. And there was a story in the journal yesterday. They talked about that real estate stocks are beating the S&P 500 for the first time since 2015. And there are many reasons behind this trend. Last week, we discussed investors rotating to defensive areas of the market for the reasons that we all know. Yep. And REITs are considered as defensive assets. So that is one reason why they have benefited. And then there has been a change in interest rate outlook. So these are rate sensitive assets, and that is why they were hurt by rising rates earlier this year. But we know that expectations for rates have come down significantly, and rates have also come down over the past few weeks.
Well, but as we sit here and talk today, we have the end of the Fed meeting.
Yes.
And another interest rate hike expected. So if that does happen, how is that going to impact?
So that rate hike has already been priced in. Okay. Everyone is expecting that they are all set to announce that rate increase this time. But expectations for rate hikes in 2019 have come down significantly with the change in outlook for growth and inflation. So that is why REITs and utilities also have benefited. And also these companies, they have reduced their leverage, reduced their debts, and improved their balance sheets a lot. And these companies, that own real estate, real assets, they are considered hedge against inflation. So those are some of the areas why investors have been putting money into these REIT stocks and ETFs, and why they have done better than the broader market, particularly over the past 2 months or so.
And while we're talking about it, for those who may not know, newcomers to this particular investment, what are REITs?
So REITs are companies that own, operate, or finance real income-producing assets. By tax law, they are required to distribute 90% of their taxable income to their shareholders in the form of dividends distributions. So that is why they have very juicy dividend yields. And while in the shorter term, they may have a good correlation with equities, over the longer term, they provide diversification benefits to the portfolio because they have low correlation with equities over the longer term. And now there are many different types of REITs that own apartment, that own industrial buildings, or REITs that own hospitals, REITs that own cold storage. So in many different areas, but basically they own some real assets.
Okay, so while we're on the topic, let's take a look at a few. Vanguard Real Estate ETF is one.
So this is the most popular ETF in this space. The ticker is VNQ. It has 30.7 billion in assets under management, has a very juicy dividend yield of more than 6%. So anyone looking for income should definitely take a look at this ETF. Pretty low cost, charges 12 basis points annually for its expenses, and you can go to the external homepage, Vanguard's homepage, to look at the portfolio and other details. So let's take a look at the portfolio, what this ETF holds. It has 190 stocks, so very well diversified. And as I talked, that there are different type of REITs. So looking at the sector breakdown for this particular ETF, we see that specialized REITs, they account for more than 31% of the portfolio, residential REITs about 14%, and retail REITs about 15%. And you can also look at other holdings, and one of the index, Vanguard REIT index funds is a top holding, then American Tower, Simon Property, Crown Castle, these public storage, these well-known real estate owning companies are among the top holdings.
Then Schwab has a REIT ETF as well.
Yes, so this is also pretty popular with 4.8 billion in assets under management. This is one of the cheapest. It has expense ratio of just 7 basis points. Dividend yield is slightly lower. So going to the quote page for this ETF, 7 basis points expense ratio. Dividend yield, as I mentioned, is 3.5%. Not bad at all, but looking at Vanguard's,
Yes.
VNQ's dividend yield, it looks much smaller. You can go to external homepage, Schwab's homepage for this particular REIT ETF, and look at portfolio or other details for the ETF. So Simon Property, Prologis, Public Storage, Well Tower, these are the top holdings. And I do not see the equity sector breakdown here, but that would be available in the fact sheet for this particular ETF.
So far, even if you're just investing for income, these are worth looking at.
Definitely, especially VNQ with a dividend yield of 6.3%. Yeah. That is really good.
All right, and then Real Estate Select Sector Spider Fund.
So this ticker is XLRE. This is by State Street, and this was created after the last GICS realignment, not this year GICS realignment, which we have discussed on the video when new communication services sector was created. Before this, the S&P and MSCI, they had split the financial sector into two sectors, financials and real estate, in 2015. So at that time, this real estate spider ETF was created, and it has become quite popular. A lot of funds came out of that. The financial spider ETF into this ETF for all, because it holds companies that were earlier in the financial spider, but now they are in this ETF.
Okay.
So taking a look at the details, it charges 13 basis points. Dividend yield is about 2.5%, so not as attractive as VNQ or even SCHH, but still pretty attractive compared to the broader market. You can go to State Street's page for this particular ETF and look at the holdings if you want to. American Tower, Simon Property, Crown Castle, the public storage, similar holdings. And REITs account for about 98% of the portfolio, and real estate management and development companies account for about 2% of the portfolio. Looking at the sector breakdown is not available here. Probably would be available in the fact sheet.
Okay. Do we even have to ask how they all stack up?
Yes. So as I mentioned, over the past 2 months or so, when stocks in general hit a rough patch, investors have been rotating to these defensive areas. So they have done pretty well compared to the broader market over the past 2 months. And that chart I have over here, you can see that these 3 ETFs that we discussed today had returned between 0 to 2%, whereas the broader market, the S&P 500 index, fell 9% during this period.
So definitely worth looking at. Do you own either of these?
So I do own VNQ in the ETF investor portfolio that I manage for our clients.
Okay, thanks for the information. More ETF information is always available on Zacks.com. Use the Funds tab in the top toolbar and it will help direct you right to it. And also on the podcast page, don't overlook Nina's ETF podcast. It's a lot more interesting information and interesting guests that she speaks with as well. With Nina, I'm Terry Ruffalo.